Hi everyone. So I welcome you on behalf of Policy Monks, a Delhi-based public policy research and advocacy organization, to gain a thorough understanding of the response dynamics of COVID-19. Policy Monks has been organizing a special series of virtual discussions to contribute to our global exchange of learnings and perspectives. And today's discussion is part of this series focusing on the impact of COVID-19 on globalization and international trade. So the world now faces unprecedented crisis, both at economic front and the health front. Nobody could have predicted this sudden turns of events and insulated themselves from it. It came as a major shock for the market. So the global capital flows, value chains, and multinational branches are the wheels of our world market that have come to a grinding halt since March 2020 as government announced lockdowns, curfews, stay-at-home orders, social distancing took up contagion, work suffered immensely. The COVID-19 crisis exposed the fragility of the cross-border supply chains. The global value chain and distributions of MNC branches across the world have interconnected the different countries in economic prosperity. Offshore productions was made seamless by the information and computer technology revolution, low tariff and lighter restrictions. These have resulted in massive expansion in global trade volume. Not only that, it has resulted in a rise of China as a new economic power. However, there came a point where it was felt that the benefits of free trade could be overstated and its cost could no longer be ignored. Two major factors were expected to potentially threaten the GDC's growth model. One is the labor-saving technologies like automation and 3D printing, and trade conflict between US and China in particular. Just when we're grappling with these questions, we're hit by this pandemic. This caused critical shortage of essential equipments and materials, exposing the fragility of the finely tuned complex supply chains. Suddenly, the liberal trade was not only the destroyer of jobs, but it also became the reason that left countries bereft of life-saving supplies. Today, we discuss about these impacts of COVID-19 pandemic on globalization, trade, global value chain, the economic implication, and also as well as the key learnings from around the globe. What should be the new world order? How can we repair, realign the politics of free trade, strengthen the domestic response to globalization and its discontent? Today we have speakers who have worked extensively on free trade, FTAs, globalization, regional cooperation, and global value chain. First, let me lay down some ground rules. We have 3 speakers, and each of them will speak for about, say, 10 minutes. And after they speak, there will be a question answer session. You can also write down your questions in the chat box. The first speaker is Mr. Matthew Lish. He is the head of research at the Adam Smith Institute, and he regularly appears on television and radio and has written dozens of opinions and feature pieces for print and online publication like The Times, Daily Telegraph, The Spectator, Huffington Post, Sydney Morning Herald, and The Australian. He is also the author of the book Democracy in a Divided Australia. Matthew graduated in first class honors from the University of Melbourne with a Bachelor of Arts degree and completed Masters in Public Policy and Administration at the London School of Economics, where he received the Peter Self Prize for Best Overall Result. He has authored and contributed multiple reports for the Institute, including Safeguarding Progress, Ready for Takeoff, a New Liberal Manifesto. Before joining Adam Smith, he was a research fellow at the Institute of Public Affairs in Australia. He has also founded a mobile application development startup. Today, he will speak on free trade and China. So this floor is yours, Matthew.
Thank you very much. Well, thank you very much for the invitation. It's a fascinating topic, and I'm really looking forward to the discussion and the questions. I was thinking, so I'm just going to go through, I think, in 3 main topics in my discussion. So first of all, I'm going to say a bit of background about how I see the kind of background of trade and particularly when it comes to China's emergence as a global power. Then I'm going to discuss a little bit about what COVID-19 has taught us, and then how I think we should handle trade in future. To start with, just on where I'm feeling about the background, is broadly speaking, I think trade and free trade and global trade has been an extremely positive development for humanity. If one thing more than else has contributed to the fact that hundreds of millions of people have been lifted out of poverty, particularly in China, but also in India and other parts of the world, it's the fact that we are trading with each other, that we're specializing, that we're able to produce goods that we can all benefit from. And that benefits both consumers in the West, who might get access to certain goods at lower prices and be able to do different jobs and whatnot. But it also obviously benefits people who are selling those goods and producing them, and it creates huge kind of investment flows and income flows to those previously lower income countries. So even with China and even with all the exceptions and whatnot we're going to discuss today, I think it's worth starting with that premise that we should have a broadly positive outlook to trade. That said, though, I think in many ways, when it comes to China, the West has been potentially quite naive. And I would include myself in that. I broadly speaking have kind of subscribed to the traditional idea. Milton Friedman put this, that trade is a great pacifier, and there is good evidence of this. And that countries you trade with tend to become more liberal, more democratic, all the things we like. And then you also had kind of Francis Fukuyama's thesis in the 1990s about the end of history, the sense in which the world was really going in one direction, that the liberal democratic world order, although there might be some challenges to it, would be overall dominant. And we kind of broadly saw this up until China in many respects, which is if you look at countries like Taiwan or Vietnam or South Korea, Japan, all these countries the West traded with, they became more like the West and became more liberal and more democratic as they traded. China has sadly in many ways proven the exception to this. The idea when China was accepting the World Trade Organization in 2001 was that not only could you get huge benefits from trading with China, but it would really bring China into the liberal world order, and they would go in and become more liberal and more democratic over time. In retrospect, that seems to be quite naive. While China's willing to pay lip service to the liberal world order, and they're happy to trade and get rich, they're not happy to really play by the kind of liberal democratic human rights framework, and we can see that in quite a lot of ways today. And they're not really happy in many ways to fall into the existing world order. They seem to be very much in some ways wanting to challenge that or really create their own world order, separate systems, like you see in the kind of Belt and Road Initiative, and build a separate, disconnected one from what the West has tried to lead. And the first probably clear sign of this was in Tiananmen Square 31 years ago with the brutal suppression of student protesters. It was probably a warning sign. Usually it's now seen that President Xi is a bit of a change, a bit of a break. It's potentially so. I think Xi is certainly got a very Bolshevik international opinion and certainly clamping down on human rights, whether it be it for the Uyghurs or be it in Hong Kong or be it in relationship with Taiwan. As well as you've got issues with China not playing by some of the same rules in terms of stealing intellectual property. You can have a debate about intellectual property rights and patents, whatever, but I think it's a separate one, as well as playing games in international organizations. And I think President Trump has probably done the world no favors here, because by Trump's, with his relatively isolationist America First approach, has really withdrawn from leading the world, which is what I do like to see America doing in a more liberal democratic path. And instead, Trump has, by vacating the field, allowed China to come in and play that role in a lot of contexts. I think President Xi's speech at Davos, where the global billionaires a couple of years ago now were applauded him for talking about free trade, is probably a strong example here, where, of course, he's just playing a bit of a game, but it seems to work quite effectively in terms of being a normative leader. This crisis, COVID-19, has kind of, I think, really not created this situation, but certainly come to highlight it in a lot of ways in terms of the challenge we face with the rise of China as not necessarily a status quo power, but a power that wants to challenge the existing world order, as well as it's kind of shown the threat of I guess the global cost of China's authoritarian regime, because what happens in China is not so just a matter for the CCP. We're asking something that can kill tens of thousands, hundreds of thousands of people around the world. Although obviously COVID's been handled badly by a lot of countries in the West, you see the initial failure in terms of being open, honest, and transparent and spread the virus as China's committed to do under international agreements. And then we've also, when it comes to trade, we've got a lot of questions about trading relations with China and the extent to which supply chains are integrated with China and the potential dangers that creates for supply chain security. I think in some ways the story is a little bit mixed, since there are literally dozens of planes flying from China to, let's say, the UK, where I'm now, full of PPE and full of equipment, and showing that essentially that great manufacturing capacity in China is actually quite beneficial to the UK. And even in terms of globally integrated supply chains, if you look at the UK's food supply chains, it's about 50% of food consumed in the UK is actually produced overseas, a lot of it in Europe, in the EU. And it's that diversity of supply chains. It's the fact that there's dependence on lots of different places for those foods. And that basically, despite there being a global pandemic, the shopping, although there was some initial rush buying and things running out in supermarkets, basically that ended pretty quickly and the shelves are filled with food again. So it's actually been quite successful in terms of the global supply chains when it comes in a lot of ways. What I think the danger, though, we're now seeing, and this is really highlighted by my home country, Australia, when it comes to trade with China. So Australia's obviously very dependent on trade with China in a lot of different ways, be it for international students or iron ore. Although Australia is one of the first countries in the world to call for a full independent investigation into the origins of COVID-19. Basically, in response to that, China slapped an 80% tariff on Australian barley, blocked imports to Australia's four biggest arbiters. They've also been threatening consumer boycotts. They've been telling the Chinese people not to go to Australia because Australia is too racist. And you've got to remember, about 1/3 of Australia's goods trade is with China. And Australia is actually a net exporter, unlike the UK, which is a net importer from China. James Forsyth, who's a kind of quite influential commentator in the UK, has reported that after seeing how Australia has been treated by China, the UK is reconsidering its balance of relationship with China, and the extent to which basing an economic relationship with China is potentially dangerous in geostrategic terms. I think these are the difficult questions for somebody who's like a free trader like myself, is that when dealing with a lot of Chinese organizations, they can play games through the government, and you can get this kind of political response if you start to question China internationally. That's not a situation you want to be in, because it obviously weakens you quite a lot. And it does, if the UK is too bullish on China, too aggressive towards China, do they start limiting PPE exports? And then you've got serious issues in terms of getting essential personal protective equipment, that is, exports. So what I think we're seeing in the UK is a moving from what was the kind of, under David Cameron and George Osborne, when they were Prime Minister and Chancellor respectively, what was called the golden era in the relations with China, in which it was very much economically focused, like getting investment from China, a little bit more skepticism, a little more questioning. And we've seen that in a few ways already when it comes in the UK. First of all, we've seen in response to the new security law in Hong Kong, the UK committing to creating a path of citizenship for what's called British national overseas passport holders. So this was a special kind of passport given to Hong Kongers when Hong Kong transitions back into China's sovereignty. And these passports previously didn't really have much value. You actually couldn't you could travel on them, but you couldn't actually live in the UK for more than 6 months. The idea is that they can extend those residency rights in the UK. So effectively, if you're got one of these passports, or you can potentially get one of these passports, you can actually, if you want to leave Hong Kong, and you have a backup, in a sense, to go to the UK. I don't know how many Hong Kongers are practically going to do that, but I think it's quite symbolically important for the UK to say that China's not following its commitments of the Sino-British treaty, which is the treaty when UK handed back over Hong Kong to China, and that said that effectively tried to cement the one country, two systems model. And if China's effectively breaking international agreements, then the UK will respond in kind. The next big decision for the UK comes to the Huawei telecommunications network. It's a decision was made last year to approve Huawei's gear inside UK's telecoms network. That was against the lobbying of the US, which has banned Huawei, and Australia against lobbying of Australia as well, which has also banned Huawei, on the idea that it could be strategic dependence could be a problem, but also potential issues when it comes to security flaws that of having a Chinese supplier, even though they claim to be independent from the government. There's concerns that they're not truly independent. The UK is said to be currently reviewing that decision. I think it's broadly expected that, although it probably won't be a removal of Huawei equipment straight away from the system, there'll probably be an end date in which telecommunications companies are expected to take that equipment out. There's already a lot of Huawei equipment in the 3G and 4G network, so it's a bit harder since telecommunications, the UK is quite dependent on this infrastructure at the moment. In terms of how we handle trade with China in the future, so I broadly think when it comes to items that are not strategic, let's say, when it comes to those basic tech supply chains and goods supply chains, the value in trading with China is still quite high. And I don't think we benefit from cutting off ourselves from China. I don't think China benefits. I think it's a path to both economic self-destruction, but also from a foreign policy perspective. Cutting off all trade with China will just heighten relations, and to some extent, China is still an extremely populous country and key to the challenges we face globally. And I wouldn't like to see us go protectionist in a way and stop all relations. And this is why I wasn't a particular fan of the kind of Trump-style tariffs. Mostly because the Trump tariffs didn't actually reduce the trade deficit. I don't think trade deficits are actually really a problem to begin with. We can discuss that if you like. But the tariffs themselves almost only make consumers poorer. They increase the cost of production because there's a lot of inputs from China into American production, and they make you a lot less efficient. I think there are three main considerations, though, when it comes to trade with China. The first one is supply chain diversity. And I think companies are increasingly doing it themselves. They're appreciating the need to not be excessively dependent or reliant on one country when it comes to manufacturing. And having a good diversity of supply chains is quite important. I mean, even if completely independently from China's geostrategic issues, there was a lot of shutdown of supply of certain factories in earlier this year, and then that's had a knock-on effect to the global supply chains. Just having a good diversity to say, if there is ever any kind of emergency in one supplier, to have alternative suppliers and be getting your goods from multiple suppliers can actually be quite beneficial, just as purely a business self-interested. The second one is a strategic movement. So we don't want to become excessively dependent on China to the point where they can use their economic might for political domination, where they can effectively threaten you and say, unless you're nice to us, we're not going to give you access to these goods that you desperately need to keep your people safe. And therefore, we're going to be clamped down on human rights, or we're going to put African countries into debt agreements that are going to make them extremely dependent on us. I don't think we want to be able to get to the point where we're so excessively dependent on China that we can't actually have independent foreign policy. And then the third one, and I think this is actually a relatively small one, but is being thought about a lot right now, which is a kind of the emergency situation, which is ensuring domestic stocks of essential goods. So having stockpiles of essential medical goods and having at least some domestic capacity to ramp up production in an emergency so that you don't get shortages if you need it. I think that's basically prudent emergency planning more than anything else, and it's kind of independent necessarily of dependence or not dependence on one country. So I guess in sum, trade is still good. We should still want to trade as much as possible, as safely as possible. I think it is becoming increasingly complex to balance that against the potential risks that do need to be considered.
Yeah, thank you so much, Mr. Lish. It just brought out the main points that China has really come out as the center of the global value chain, and we need to think about the realigning this value chain going forward. Our next speaker is Dr. Jay Bhatia, and she is attached to the Margaret Anstey Center for Global Studies and Newnham College, University of Cambridge. Her research interests are in political economy, international development, new liberalization, and financialization with a focus on South Asia. Her current research takes a South-South cooperation perspective to examine how the growing internationalization of finance in the Indian economy has enabled greater international trade and investment. So Jay has a doctorate degree in international development from SOAS University of London. She has an MSc in South Asian Studies and an MBA with distinction from the University of Oxford. She is a professionally qualified chartered financial analyst and chartered alternative investment analyst. She has worked in business and finance in the UK, also in India. Her expertise lies in corporate finance and financial risk management. She has taught at SOAS University of London as a teaching fellow and the University of Oxford as a department lecturer in South Asian Studies. Today, before I talk about her topics, I'd like to welcome our third speaker, Dr. Bishwajit Nag, who has just joined us right now. Welcome, Dr. Nag. We have already started the discussion. And so today, Dr. Bhatia will be speaking on globalization as well as deglobalization. Deglobalization in supply chains in the era of nationalist populism and globalization in financial market. So, Dr. Bhatia, you can start now.
Thank you. Thank you for inviting me. I am looking forward as well to the question answer session. Well, what I want to talk about is from a more of a macro perspective with South Asia in focus. The idea here is to look at, there are two things that are happening simultaneously. There are two big trends which are opposed, but they're happening in different parts of the economy. So what we see is that there is deglobalization happening in supply chains. So there have been major disruptions to supply chain networks across the world. You see that countries have started pushing for local manufacturing, given the amount of shortages that countries have gone through. So this is sort of in line with the general trend towards national populism that we've sort of seen post 2015, 2016, when we saw Trump come to power. Trump came to power on Make America Great Again. Let's bring America first, let's bring jobs back to America. So that was one of the big deglobalization trends that started in Europe. We saw Brexit happening with Boris Johnson pushing for Brexit, and then in India we saw Modi's Make in India policies, which were pushing Indian manufacturers to sort of produce and manufacture in India. And now more recently, he's come out with Atmanirbhar Bharat, which is the idea is to make India more independent and less dependent on other countries. Right, so there are lots and lots of governments basically across the world that are now incentivizing their companies to bring manufacturing back to their shores. So another example would be Japan. Japan just invested. Japan has sort of incentivized Japanese companies to move their production away from China to Japan. And they're giving about $2.2 billion as of right now. But then this is a very common trend, and we sort of see this happening across many, many different countries. So there is this big trend towards, deglobalization. Now, before we sort of like talk a little bit more about deglobalization, there's one thing we must keep in mind, is that how globalized is the world actually? So the way to see this and the way to understand how globalized we are is to see how quickly COVID spread across the world. Right. So saying this, that the world is extremely globalized at this point, there is a trend which is moving away from that, is trying to deglobalize. Right. So now, how will deglobalization become substantial? Now that is a question that is a $1 trillion question. Now that will actually depend on how long the pandemic lasts. Right. So if it lasts 6 months, then I think things will go back to the previously established systems of manufacturing, right? If it lasts 2 years, then that will be a little bit more permanent. But if it lasts longer than 2 years, or 2 to 5 years, then we will see changes which are, I think, far more permanent than they would otherwise be. So again, the depth and the scale of deglobalization will depend on how long COVID-19 lasts. How long does it take us to get vaccinated if and when the vaccines come out? So there is this whole trend which you see in supply chain, which goes towards deglobalization. Now, at the same time, when we are seeing deglobalization happening, what we're also seeing is globalization in the financial markets. So, as you've seen, the financial markets have behaved quite irrationally, yes, and they have sort of been going up instead of going down during the pandemic, right? Across the world, European markets have been up, US markets have been up, Indian markets have been up. So, what you see is that suddenly the financial markets are doing really well. Now, more specifically in India, what you see is there's a globalizing trend when it comes to finance, right? More and more VCs, PEs, sovereign funds have been attracted to invest in India. Yeah, and more so after the pandemic, because there is a lot of money looking for capital. There's a lot of capital looking for higher returns in investments, and India is one of the most promising countries when it comes to the whole startup ecosystems. So what we've had is SoftBank. So if you again go back to the 2016 era, 2016 onwards, what you see is you see SoftBank coming in, funding startups like Oyo, Paytm, Gophers, Ola. Then more recently, if you see Geo Platforms has been able to attract, VC and PE investments from Silver Lake, Vista, Atlantic, KKR, Facebook. And more recently, it has attracted the Abu Dhabi's sovereign fund to invest. So what you see is that there is this whole globalizing perspective where global investment firms are looking to invest in India. So at the same time, when you have deglobalization happening in supply chains, you have this globalizing effect happening in finance. And that is also sort of changing the way the economy will work in the future, I think. And it'll also depend on, again, how long does the pandemic last? So everything is very dependent on that.
That's a very interesting perspective to think about it, like the deglobalization happening at the in the supply chain level, whereas globalization is happening at the financial market. You're right that the capital is flowing in into India, and then Geo has seen so much of investment coming in during this pandemic, and our market is going up. It's there's no rationale for it, and it's moving up because of the all this liquidity coming in, liquidity that central banks are pushing to support the economy are coming into the capital market. That's very interesting perspective. Our next speaker is Dr. Bishwajit Nag. He is the professor of economics at the Indian Institute of Foreign Trade, New Delhi. He's involved in empirical economic research for more than 2 decades, and he has a teaching experience not only in India but in Tanzania, Italy, Ukraine, and Germany. He has been a visiting research fellow at the Institute of Development Economics, Japan, and worked on India-Africa trade relation and how free and open Indo-Pacific strategy can be utilized for developing global value chains in certain sectors spread across countries in Africa, India, and Japan. His current research interest includes macro and farm level issues related to GBC and innovation, trade agreement and India, trade and employment, ICT, open innovation, business strategy, trade facilitation, market research, etc. He has a number of projects with the government of India and international agencies, including multilateral bodies and private sectors. He has published articles in several international journals and also served as an anonymous referee to reputed journals, including Review of Development Economics, Voltage Review, Economic Modeling, etc. He has supervised 5 PhD theses. Dr. Nag has worked on a number of projects sponsored by UN, IFC, World Bank, WTO, EU, JICA, DFID, etc. He has written 3 books. First one is My World with Rafiki, an economic travelogue and miscellany. And the other one is Business Innovation and ICT Strategy, and India's Trade Analytics Patterns and Opportunities. The topic he would be speaking on today is post-COVID-19 global economic order and China. The floor is yours, Dr. Nag. You can go ahead.
Thank you very much for the invite and very interesting discussions. I could not hear the first speaker's entire part because I joined late. Sorry for my late coming. But I heard the interesting discussions that in supply chain declining, so there is a deglobalization and there is a globalization of finance. So that basically at the point I'd like to start with. And I take this particular point as a very important point because the new global order will be through the finance, and China will actually play an important role. So I try to argue in this particular point throughout my presentation. Okay, so what we have noticed is basically there is a kind of a China bash. So everybody wants to withdraw from China or ban Chinese app or Chinese products. But is it really so simple? First question, because maybe the frontline products you can identify they are the Chinese, but you just think of that even in Apple phone there are Chinese components. Okay, even in Samsung you will find Chinese components. Even in automobiles, there may be many Chinese components, or maybe produced by Chinese company in some other country, because our globalizations have actually made the fragmented production systems in such a way so that it's really, really difficult to find out exactly where the product is originated, because there is no one single country where one product is actually being produced. So that's basically one particular point I'd like to start with. Second thing, the trade war, which started much before the pandemic. So if you look at, there are two phase one and phase two kind of a discussion between US and China. Started phase one, they decided to reduce the tariff actually after raising the tariff, and in phase two they could not go ahead because of the pandemic. So even the China and US trade war is a kind of a love and hate relationships actually, if you see in a long-term perspective. Second thing, if you look at that President Trump actually initiated a debate calling it a Chinese virus. Okay, but if you see that debate has come down. If you think of today, nobody is actually blaming China anymore about the origin of the pandemic and spreading the virus. So it was very much this kind of narrative was very much common 1.5 months back, but the now narratives are actually changing. So along with the pandemic issues, the global political orders are also, and media also playing a very important role, how the informations are actually reaching to the people and how business are actually reacting. So China was actually getting ready for this kind of situation as well. So it will be foolish on my part to think that China didn't know that that the world will be very much upset one day, because everything everywhere is becoming Chinese. Okay, so what kind of strategy they were thinking of? This is just my imaginations, that could be the possible things. Number one, China was as you see, the GDP growth rate of China was coming down since last few years. Their export surplus is also going down. So this is so because of this, what China was trying to do, China was trying to set up the factories in other countries, or China was trying to take the advantage of investment. So because they were having huge surplus, if I just tell the number that in 2018 they were maybe having around 4 trillion foreign exchange and reserve, and now it has come down to say around 3 trillion. So this was an excess reserve which was pushing their exchange rate up. So of course the Chinese goods were gradually becoming uncompetitive in the world market. So to get out of these systems, if you think of how Japan actually started spreading their investment outside, exactly because of the similar reasons, because Japanese yen was getting appreciated. So what is the usual way actually one big country can actually do? So Southeast Asia is the best place to start with. So there are thousands of Chinese companies actually all over the world, and as a result of that, the supply chain is actually really quite spread out. So if we think that supply chain can be withdrawn from China, so it may be withdrawn from China as a country, but not by the Chinese. Okay, the Chinese are actually having a joint ventures in Indonesia or Vietnam or in India or in Africa or in Middle East or in Central Europe, or even in Western European countries, even in US. So they were actually supplying from there. So Chinese money is very much there. It may not be the products are originated in China. So this is basically the kind of a preparations. third thing which I like to highlight, that the aspiration of China since 2000 to bringing renminbi as one of the reserve currency. And if you look at the series of events that how actually it unfolded, that slowly China actually made many bilateral agreement in which the trade can be done in the local currency or bilateral swapping. Okay. Second thing, in 2016, IMF allowed Chinese currency to be one of the currency in SDR. So that basically allows any country to hold Chinese currency as a part of their reserve. Okay, so that's basically China was trying to push it in that way. Now, and if you look at the Chinese currency in the trading in the currency market, that also has a significant rise between 2013 to 2016. So these basically are giving us a picture that China maybe in future will leave the real economy, that is the manufacturing. So they will move to the finance world. So that means trying to control the finance economy, because they are already holding huge amount of government bonds from US and European Union. So in a way, they were trying to control the demand of the government bond market of the 2-3 big players. So that is one way. They have a huge investment through private companies, joint ventures outside. They're also having, under the Belt and Road Initiative, huge amount of money parked in other countries, even in the developing countries. So now you think of a new situation that all supply chain has been withdrawn from China. Suppose, for example, in India, we are producing the goods, but we will be also trying to export. We'll try to export to where? We'll try to export to our standard markets, which is US, European Union, Southeast Asia, and Africa, and you will find out that the Chinese company having a joint venture the companies in those countries are already possibly a market leader in a different way. So it will be much difficult for us to export even when the directly products are not coming out from China. So that's basically my hunch. So I'd like to end it with these things that maybe in the manufacturing sector as a whole, Chinese dominance will come down, and that will be the deglobalizations, as you have mentioned. And the second thing is, in the finance world, there will be a globalization, and China will have a significant presence in the coming days. Thank you very much.
That's very interesting. So it'll be naive to think that we can just simply wish away Chinese goods and it will hurt them or something, because we can always be maybe exporting goods from other countries, but that might be made by some Chinese company who has a joint venture in that country. And also, it's very interesting to know that they have a long-term strategy, like how they will be going into the financial market, how they want to make their currency the reserve currency. So I think we'll move to the question answers. So first question I have got from Anurag Gupta from First Meridian. It is for Matthew Lish. What will be the impact of China's supply chain to the West? Would there ever be an alternate to China?
Yeah, I mean, it just seems like it would be a bit gutsy to make a claim that we're seeing the end of globalization, or that we're going to see the end of trade with China, or although there are these domestic efforts to get more domestic supply chains, that companies won't see the benefits of international trade, and they won't see the benefits of specialization of different countries and different goods, different times. I don't think we're going to see any kind of entirety locking out China or a global trading system. I think that's just extremely unlikely. I'm not sure it would be a particularly good thing either. As I was getting at earlier, I think trade with China is mutually, you only trade when something is mutually beneficial, when they're selling your product and you're buying a product that you want. And for a lot of goods, there aren't even strategic questions necessarily. While you can talk about strategic questions about Huawei and telecommunications, and do you have them in the center of your networks? If let's say you're buying a lot of consumer goods, let's say buying toys, does it really raise any strategic issues that teddy bear that you bought for your child was made in China? Probably not particularly. So I can't see any kind of need for every country to manufacture its own teddy bears, let's say, as an example, when some countries might naturally have some scale in producing those goods and be able to do it. And that, in fact, if you want to be a richer country, you tend to actually want to get out of manufacturing at that kind of level, and you want to get into more advanced manufacturing, or you want to get into services trades. So it doesn't seem like something that you want to cut off China's supply chains in entirety. I think what you're more so going to see is just when it comes to more strategic industries or strategic supply chains, a lot more diversification. I don't buy the kind of economic nationalism, Trumpian logic that America or the UK or Australia can or should produce everything. But there might be a need, for example, to make sure that there are a guarantee, let's say when it comes to antibiotics, that no matter what, there's agreements in place that a friendly country with similar values can produce that same good, and that you're not dependent excessively on a country that doesn't necessarily share your values for an essential good. I think we're going to see a lot more than that necessarily of Australia having its entirety of a medical drug producing capacity. It doesn't seem particularly likely, or the same for the UK or the US. It still seems likely countries are going to specialize, and countries are going to trade with goods that they're not specialized in, and they're going to be richer for that. They're just going to have to think a little bit more carefully about supply chain security.
Okay. Yeah, thank you. Next question is from Anna Upreti from Ashoka University. The question, it's not directed to anybody, so any one of you can take this question. The question is, do you think protectionism is here to stay, or is it just a short-term scenario that we are witnessing? Will there be a reversal of capitalist globalization led by market integrations? Any one of you, if you want to take it.
Anyway, so let me just start then. Okay.
Yeah.
I think the world will try to have an experiment of protectionism. Okay. So we are hearing this new jargon from just in time to just in case. Okay.
Yes.
So there is a change in supply chain, and just in case that you are not having a kind of a good relationship with a trading partner, so you need to switch the supply chain to a more comfortable zone. Okay. So that means you need to have your second and third strategy ready, right? Maybe you will have as kind of a some kind of a production base. You need to keep it ready, so you will activate it if there is any problem. But the main challenge of that is that there will be an inflation because of this, because there will be cost associated to that. The globalization actually gave so much of confidence to the countries that this kind of situation they never imagined would ever come. Okay. And that's why the cost of production was going down, because if you look at last 20-25 years, there's not much of political tensions, and trade related tensions are not there. So that gave a huge confidence, and that has actually reduced the cost of production significantly. But now if you bring back just in case kind of a concept or a protectionism, so cost of productions will go up. I do not know substantially, because it looks like that the consumers are going to pay more. Second thing is that whether the consumerism is still which is at a suppressed level, how much time will it take to come back to that level, then only trade and business will actually be able to survive, even with a higher amount of cost. Whether the consumers are ready to pay more, or consumers are actually reducing their demand permanently. So the entire effect of whether the protectionism will stay for long or not depends on these two questions: how consumers handle inflation, and how consumers are reducing the payment.
And do you want to add anything, Matthew?
I mean, I just, in terms of responding to the original question, is protectionism here to stay? I mean, I think we've seen over the last decade, probably since the GFC, an increase in a lot of different forms of protectionism and trade barriers. Not at the extreme extent to which have completely stopped global trade altogether, but have certainly slowed the increase in trade flows. The broader answer to that is I can't predict the future, but I would hope not, because I think we should remember the reason why we established this global trading system in which everyone committed to remove barriers was because we saw the consequences during the Great Depression of every country putting up huge barriers, thinking it was protecting its domestic industry, but in fact retarding the global trading system, and as a result leading to a very long-running recession. If we're going to get out of our current global economic crisis that has come after responding to COVID, we're going to actually need to increase trade flows, and we're going to want to make businesses as efficient and as productive as possible, whilst accepting potential supply chain risks. And we're still going to want to be trading with each other, and that's going to be a very key way back to prosperity. So I would hope that we don't go down this protectionist line, because I think it's going to make everyone much worse off.
Okay, should I go back to because we have not much time. I think we still have 15 minutes. So we'll take the next question. Next question is for Dr. Nag. It is from Harshita Agarwal, ENY. The question is, has India gone back to the 1960s with its self-reliance and potential import substitution policies, or is this response warranted given the current climate, pandemic, and border tension? If it is latter, then are we likely to reduce the focus on self-reliance post these issues subside? That is, after the pandemic, do we go back to how we were before? What, according to you, should be the ideal response during and post the pandemic? It's kind of long.
Yes, I understand. See, the main challenge is whether India can sustain this kind of a protectionism. Whether because if you look at our manufacturing sector's productivity as systematically was going down, okay, and what we expected from the free trade agreements with Southeast Asia, that will bring a lot of components, will process it in India, and will export to the rest of the world and also to Southeast Asia back. Apart from in one or two sectors, there is not much of progress on it. And what we expected that during 2009-10 to 2015-16, that our manufacturing sector share in our GDP will also go up. If you look at the 12 5-year plans documents, it also expected that having focus on agriculture significantly and also trying to increase our manufacturing sector. Our Make in India also had an effort to increase our self-sufficiency, right? So, but if you look at when Make in India was actually in place, that time there is no trade war and there is no COVID-19 related crisis. But during that time also we have found out that even after having significant improvement in ease of doing business, our manufacturing sector's contributions didn't go up substantially. Okay, so so I feel that maybe there will be a little bit of rhetoric for protectionism because of international political order or domestic constituencies are there. So there will be a lot of such focus on this, but in reality, to going back to 1960s kind of a thing, it has to be a long drawn plan. So for that we require a huge plan actually. So how do one, so the situation in that case will be different from 1960s. Okay, so in 1960s self-reliance or import competing sectors to be developed are different from today. Today we invite the foreign players to come in India. Okay, at that point of time, there is not much of FDI in 1960s. So we want the foreign companies to come and produce for India and rest of the world. So we need to focus huge amount of FDI. We need to change completely the supply chain, and then it is possible. Otherwise, it looks like a far-reaching kind of ideas.
Okay, that's very well said. There is another question for Dr. Nag. It is from Guru Ratnam from water.org. What will be the impact of migrant displacement on exports of India due to COVID-19? Interesting one.
Yes,
Migrant displacement.
yeah. This answer to this question is actually of twofold. Number one, our exports are already going down. When the migrants work are actually working in some of the sectors where migrant workers are actually required, and now migrant workers have gone back. I mean the sectors where migrant workers are very much there, basically in textile or especially in apparel sector. At the low level apparel sector, large number of people migrate, and then say in some of the exportable agricultural products like basmati rice, in which large number of people are working. So indirectly, they are also working in an export sector. And then there are, other sectors like in tobacco and other things where migrant workers are there. The workers have gone back. World market is down, so production is also down. Exports are not happening. So we will not feel the pain at this moment. But if the migrant workers come back, so think of few situations. If the migrant workers come back to the productions, but the exports are not growing or exports demands are not growing, then the migrant workers after migrations, their conditions will not improve and they may remain jobless even after migrations. Okay. Now, this is situation one. And situations two is, yes, they have migrated back again to their workplaces, and they are working fine. So in that case, of course, what will happen? The productions will go up and they will get the benefit. So the migrant workers' benefit in the export sectors are directly linked to the world demand.
Okay. Next question is for Dr. Jay Bhatia. It is from Ishan Khan from Exim Private Limited. The question is, will the possible reinstating of GSP benefits for India's exports to the USA benefit the Indian economy?
Well, yes, it would benefit, I think, the Indian economy, but the question to ask is to what extent would it benefit? So if we look at 2018, some of the 2018 numbers, Indian exports to the US were about $52 billion. And under the generalized system of preferences scheme, it was about $6.5 billion. So we're talking about 12 or 13%. Now, the amount of duty that Indian companies under this scheme saved was about $220 million. Now, the question to ask is that whether, saving the $220 million is worth what we would have to do if we wanted to reinstate the benefits. So the US has been progressively asking for more and more and more changes, access to Indian markets, especially to the healthcare and the medical equipment market. Now, one of the things that we should consider is national interest. Now, India is a very poor country. Our GDP per capita is growing, but it is still much, much, much less than what GDP per capita you would see in the US. And so one of the things that the government needs to ensure is that the costs of healthcare are kept low and healthcare is accessible to as many people as possible. Now, when we open up the market, you believe in free trade, you open up the market without having, the correct regulations in place, that could be disastrous. You'd have a very high increase in some of the healthcare costs, and that would not be very good for the Indian economy. So the question again to ask is that, what can India do? Yes, India should open up its markets, but we do need good regulations in place. We need to have thoughtful policies that will ensure that it is not only beneficial to the US, but it is also beneficial to India. So that needs to be ensured before India can sort of agree to all the terms that the US is asking to reinstate these benefits.
Yeah, to analyze the cost benefit. And
Yes.
there is another question along the line. Should there be further liberalization of FEMA laws that allowed marketplaces to collect forex payment for the B2B users and act as an escrow? Should we simply put off the services of Alibaba Trade Assurance and introduce similar services in India?
Well, helping trade and helping trade finance is the best thing that the Indian government can do. Now, the question is, it's a question of, do we have enough regulations and enough regulatory infrastructure in place to ensure that these institutions will work? Right. So the question is not of whether we should have. Yes, we should have, if it's going to work in the way it's supposed to work. But what happens is that when you suddenly, open up and you allow private companies to come in without having adequate regulation, then there is a lot of violation and there's a lot of cheating, and that could actually have the opposite effect. So in order to actually increase, trade and accessibility to finance and insurance, we need to have institutions and regulations in place that would protect, the buyers and the sellers. So I think that is required. That is more required than, just whether we should just, make FEMA laws easier. I think, yes, FEMA laws do need to become easier, but then we need to have regulations in place to ensure that there is less violation and that things work as they're supposed to work.
Okay, so I'm going to the next question, which is from R.P. Goel from Ajim Premji University, and it is also for you, Dr. Jayabati Bhatia. The question is, what will India's position be in changing global trade with China?
Well, India has been trying to attract away investment from China. India's been promoting and giving a lot of incentives to global companies, asking them to come to India for manufacturing. Now, there is a lot of, the government is making a very big effort to sort of do this, and also attracting back some of the Indian companies that have manufacturing operations in China. So there is that trend. Now, again, like I said, we will know how deep this trend is depending on how long COVID lasts, right? So if it lasts 6 months, I think it will go back, because China has in so much financial strength that they will be able to come in and subsidize manufacturing to such a great extent that a lot of countries, including India, might find themselves not being able to compete. So that's one of the problems. But if the COVID would last, let's say 2 to 5 years or even longer, then I think India will be able to attract away some of the big companies there from China towards manufacturing in India.
Yeah, I agree. Things are so uncertain at this point. We don't know how long it will last, whether it will just for just 2-3 months or it will be like 2-3 years. So we'll have to see how it goes. So I think we have had some good discussion today around. So we know that around the world, countries are trying to diversify their global value chain, shifting parts of the production platforms away from China. We have seen how United States is contemplating creating an economic prosperity network through an alliance with trusted partners to move the global value chain production away from China into friendlier countries. I think one of the speakers have already said how Japan has announced a 2.2 billion stimulus package to help its companies to shift their production bases out of China to other countries. While many MNEs and countries might wish to diversify their production platforms away from China, it's easier said than done. All depends on how the things evolve going forward. Post COVID-19, many of the companies will be starved of cash and may not be able to move away from China to invest in other countries in an abrupt short-term manner. It takes years to establish global value chain. So we are an interesting time. It will be interesting to see how things evolve. I think with that note, we will end today's discussion. And thank you so much for giving us your time and for the viewers who have joined in. Thank you.
Thanks.
Thank you.
Thank you. Thank you very much.
Thanks.